And with that, it's my pleasure to introduce our speaker and talk about the technology. So your lines have been muted for the duration of the webinar, but you can ask questions at any time. We encourage you to do so. We'll try to answer as many questions as we can at the end of the webinar while still keeping this to 30 minutes. You can ask questions through your chat box, but your lines are muted. You can't do it in person or over the phone. With that, allow me to introduce our guest speaker. Jim Kruse, Condon Skelly Director. He's a lifelong car enthusiast and collector. He's been part of the collector car insurance industry since 1993. He became a director of Condon Skelly in 2011 and is considered a subject matter expert in this area. With that, Jim, the floor is yours.
Hey, thanks, Alan. I appreciate the intro there, and thanks to everyone taking part of their valuable day and time and spending it with us here. As Alan said, I'm the director at Condon Skelly Insurance. Been around the car hobby and the industry literally my entire life, but we've only been making a living at it since 1993, which I think is everybody's goal as a car person. So, but I'm here today really to speak on what I think right now is a significant issue that we've got going on in the industry, the agreed value impact on collector car insurance. You know, you ask any collector car guy out there, his car is an investment, and you know, we think about that from the standpoint of what we're doing on a day-to-day basis, and we have the opportunity at this point as through insurance to make sure that that investment is taken care of and supported by insurance. One of the ways we do this is when we're underwriting vehicles, we want to make sure that those cars that they're taking proper care and use of the vehicles. You know, that's one of the questions we get all the time. How do you determine what a collector car actually is? Well, that's one of the things that we look at when we underwrite an application, as whether or not how they actually treat it. We want to make sure that they're maintaining and upkeep those cars. These aren't just vehicles they're driving every day. They're vehicles that they're using for pleasure use and things like that. So we want to make sure in the underwriting process that that owner is upkeeping their vehicle at the same time. And with that, it leads us to our point for today, you know, insuring that car to its agreed value and what it means. There's some good news and some bad news here with agreed value. The good news is the agreed value ensures your customers will never receive less than the actual amount for their collector car should a total loss claim occur. That's good news. The bad news is the agreed value needs to be closely evaluated and updated every few years for accuracy, or the insured could lose a considerable portion of his investment in the event of a claim or worse, a total loss. Now, real quick here on these 2 points, seems pretty basic, but this really has come to light here in the last year with the impact of Hurricane Sandy. I think that's one of the main reasons why we're presenting this today, is that it came to light throughout the industry. There were vehicles out there that were significantly underinsured because they were not monitored as they should be. No one's fault really, but at the same time, we as insurance professionals, it is our fault. We need to make sure that that stuff is absolutely monitored. So what we're going to talk about here is what happens from the downside under insuring a classic car. Now this specifically here, we're going to talk to the point being that from an E&O perspective, and I want you to look at these 2 slides here. These cars are absolutely identical, and this is real life comparisons here. This is what we see every day, applications coming into our office. You've got Mr. Skywalker's there, Mustang on the right, insured for $25,000. And then you got Mr. Solo's Mustang there on the other side, insured for $5,000. Identical cars, identical risks, both submitted by 2 good agents to our agency, and we're going to underwrite them accordingly. What happens? A fire. Now you got 2 checks getting paid out. One for $25,000, again going back to the agreed value of that first car, Mr. Skywalker's, and one for $5,000. Big issues. Why would one get paid $25 and not and the other one $5? Well, because that's how the application was submitted. We trusted the agent on the outside that was the value. Here's your problem. That second person, odds are, is going to get paid their $25,000, except it's not going to come from the insurance policy. It's going to come from the E&O. The agent, as you know, on everyday insurance. You're responsible for advising, reviewing, and maintaining insurance. That's a significant responsibility. This is no different than you would do for their homeowners or personal auto or any other items that they would have. So it's critical from an E&O perspective that the values are maintained accordingly. Now, along the same lines, there's some upside to this too. This isn't just a fear tactic to make sure that you monitor this correctly. There's some real positives here from a financial standpoint and a customer retention standpoint. First off, you get past the E&O side. When you insure that vehicle for $25,000, all of a sudden you've turned a minimum premium policy of $95, let's say, into a $200 policy. So you've got some financial benefit along the way as well. The other side is, if you don't, as an agent out there in the field, insure that vehicle correctly, I guarantee you there's an agent down the street that's going to. And they're going to approach that insured with the idea that, hey, how could your agent underinsure your car, allow you to do that at $5,000 when it's really worth $25,000? So at that point, you could quite conceivably lose that insured, and that's one thing you don't want to do. So by insuring the vehicles correctly, you've crossed three strikes here. You've got rid of the E&O exposure. You've got rid of the idea that you're going to lose the customer to another agent who's looking at it correctly, and also you're going to make a little more money at the same time. The other aspect of this is also, we're only talking about total losses here. Don't forget that most claims that you're going to see in this collector car industry are partial losses. Again, Sandy was unique in the fact that there were literally thousands of vehicles overnight that were totaled, something that really was shook the timbers of the collector car insurance industry. Most claims you're going to see day-to-day are partials. This almost has a bigger effect on a partial claim than it does a total loss. Now, what do I mean by that? Well, there's no co-insurance with auto. You got co-insurance with homeowners. So, if you underinsure a house or a building, you're only going to get paid partially on it. So, at the end, the insured is going to be penalized in the case of an underinsured item. With collector car, the penalty is a $5,000 partial loss. Now, let's not worry about the fact that Mustang was burned. Let's just take, for example, it got rear-ended in an accident. A $5,000 claim on that car, all of a sudden, its agreed value is $5,000. It's totaled. That is a shocking situation for an insured when they turn in a claim that potentially they feel like it should get fixed and go down the road, and we as an insurance agency are saying, you know what, though, we had it insured for $5,000. That's the total amount in the policy. It's an agreed value policy. Under the contract, it's totaled. So you've got the other added benefit here of insuring the car at the full value. In the event that there's a partial loss, that insured is going to get their claim paid. It'll be settled accordingly. It'll be fixed. They'll be down the road. There won't be any issues with who owns it. That's a big problem out there, and it's something you really, really need to consider. One of the things that we have done at Condon Skelly, because it is such an issue, is we have actually instituted an entire department that is there just to make sure that your vehicles are insured correctly. We've called that our value outreach department. And what we've done is we've actually gone through our own clients, our own agents, our own insurers, and try to find vehicles that are underinsured. And we've reached those out directly ourselves. That department has expanded now, and then is there to help you with your clients, people maybe we haven't got to, clients that may be placed with other companies, that at that point we then can respond and make sure that they're insured correctly. What that means for you is an expedited review of all value increase requests. So if you've got a policy with us currently, and I would tell you this, many of the agents I see here that are listening to me right now are our current agents, so you probably talked to me already about this. But for those that aren't our agents, if you had accounts with us, we would actually look over those files for you, make sure they're insured correctly, and do that in an expedited fashion. There's no waiting around at that point. We then would actually get that done for you by direct billing the client, so you don't need to worry about it, and then would collect that premium for you, no issues at all. So we're trying to remove that burden of making sure those vehicles are insured correctly from you. And I would tell you, at the end of the day, no one's out there saying that you as an independent agent in the field is an expert in the collector car industry. That won't save you, though, in the event that there's any issues with a value because your insured goes to you expecting you to be the expert. So we're here to support you at that point to make sure that, that all those bases are covered at the time of underwriting. Now we got this section here for questions. If there's any out there, Alan, that
Thank you. We do have some questions that came in. And while we're doing that, we're going to launch a poll. If we have several questions that have been up in the queue. If you have a question, feel free to submit it in your question box, and we'll try to answer it when they come in. You have a poll up right now. If you'd like additional information, for example, a copy of this presentation, more information on this topic, or you'd like to suggest another webinar topic for Condon Skelly, please let us know. The results will not be shared with everyone. We will respond individually to anyone that answers the poll. And we'll leave that up for 60 seconds while we take our first question. Jim, what is the best way to get my clients to raise their value?
That's a good question. I would tell you that you know, maybe I didn't go in depth enough from the standpoint of how to get it done. Sometimes there's significant pushback from the insured. You know, they've owned the car for 30 years. They only paid $5,000 for it, you know, 30 years ago, and today all of a sudden it's worth $100,000. You know, they're not thinking about what it would, their actual financial loss today if it would be gone. They're only thinking about what they paid for it back then. I would tell you that, and what we have found is, through our value outreach department, we are very capable of finding consistent types and makes and models of vehicles to then show them comparisons to say, hey, this is what your car is worth, and lay out not just what their loss is going to be financially in the event of a total loss, but then make sure they realize in the event of a partial loss that the car could be totaled as well. That's a shocking factor to a lot of those folks out there that you know, a partial loss could end up being a total if they've underinsured it. So that's really where we come in at Condon Skelly, is with our value outreach department to help support them with facts and figures that they can outlay in front of their client just to make it very easy at that point.
Next question, will you increase the value automatically each year?
You know, we don't do that. There's endorsements out there, inflation guard endorsements, and I think that that is a way to try to keep up with values. However, in this industry, no vehicles go up by a certain percentage or down by a certain percentage each year. There is no good way like you might find in when you're insuring property, where an insurance company might re-rate based on most recent construction costs and things like that. That more or less is just kind of a feel-good thing than anything else. I'm not saying it's a bad thing. Customers always like to hear that the car is actually increasing in value, but that doesn't accomplish what we're here to talk about today, meaning getting the cars insured for the correct value from the very beginning. But the inflation guard is one way to at least add some value to it.
Do you have a specific source you look at for value, something we could use with our customers to establish value?
No, that's really interesting. There are quite a few magazines out there. There's auction companies that you can go to. I would tell you that in this day and age, one of the sources that we use, just a really quick reference, is the NADA guide. That's right on our website. It's an easy link. It's not a big deal. But if you get into a situation where you've got something truly unique, in this day and age of the internet, there's tons of resources out there. And for anybody that would want specifics as far as exact sites or contacts, feel free to make sure we have your information. Be more than happy to follow up with you, especially in specific areas. In this day and age of the collector car industry being worldwide, no longer do you have to think if you're in Indiana, well, this car is only worth 10 grand here in Indiana. You know, that car may be worth on a worldwide basis 3 times that amount if the values are increasing, let's say in Europe. So now we just look at domestic values, we look at international too. So in a roundabout way, there's no good one answer where to find values. There's multiple, but we can direct you to the right place.
Can you please explain the $5,000 penalty again? Does this apply to all policies, states, customers?
Now, when you talk about the $5,000 penalty, what we're referring to there is it's really not a penalty. It's again, that was what that car was insured for $5,000. So that customer, again, we're looking at 2 identical cars here on the screen. That customer is only going to be paid $5,000 in the event of that loss, as opposed to the other insured who's going to get paid $25,000. It's not really a penalty. They're getting paid what they insured the car for. The penalty comes in when the insured figures out through chat rooms and talking to his friends that his car was underinsured and that his agent should have told him. The penalty really falls back on us as insurance professionals for not insuring it correctly. And that's the big issue that we have here. So no penalty per se.
Do you ever require appraisals on cars?
You know, we don't. I know some companies out there do. We've been, Condon Skelly's been insuring collector cars since the 1960s. We've got underwriters on staff that have been here 30-plus years. So we feel very comfortable with most cars that we're looking at as they come through, making sure that that we don't require appraisals. I would tell you that some appraisals out there are great. Some aren't worth the paper they're written on. If you've got somebody that needs an appraisal for, let's say, tax reasons, that's a different area that they might want to consider it. But for us, unless we need verification on, let's say, a multi-million-dollar car that it is exactly how it's being described, we typically never require an appraisal.
As an agent, do we have binding authority for adding new purchases if they are going to look over the weekend?
Good question. The agents do not have binding authority, and this is an area that I think is a tough one for a lot to kind of understand because you're used to having binding authority with your normal everyday companies you work with. Our policy, though, however, does give them newly acquired auto coverage. So if they do buy that car on the weekend, they have coverage equal to what they have on the policy right now for liability and up to $25,000 in physical damage for the first 30 days. Now, as far as having binding authority, and to address that real quick, that's something I would tell you as an agent that be careful what you wish for. You might go on, if you had binding authority, you might put somebody on cover for a vehicle that it's not what it's worth. You always want somebody from an underwriting perspective, again, unless you're an expert, and I would tell you that in the industry out there, there's not a lot of individuals out there that are true experts in the field. You want an underwriting collector car expert to look at that to make sure that, again, all the bases are crossed to make sure it's exactly what you want to do. So,
can we submit policy info to the Value Outreach Department for review and then provide us with a current value to then present to the insured?
Sure. I would tell you that that's a service that we provide to our policyholders and our agents. But if you're an agent that does not have business with us currently and like to see how that would work, absolutely. Send it on over, and it'll get run through, and we'll give you our opinion on what it's worth. Now, whether or not the company it's placed with currently would agree with that, that's totally up to them, but you can at least see how the process works. Not a problem at all.
I don't believe my agency has been contacted to review our existing book of business. Can and will be contacted?
At some point, they should be. I would tell you that what we try to do internally right now is find the most egregious situations within the book and work down from there. If you've got concerns specifically or you would like, even if you don't, if you would just like to have the department look at those, just let us know and we'll get you right to the top. Not a problem at all. No problem.
Doesn't the insured get a questionnaire at renewal to fill out to see if we need to increase the value?
Sure, they do, and I'm sure we all understand how insureds sometimes just put same as before or no change. I would tell you though that whether or not that works as far as standing up in court when it comes time to making sure the vehicle is insured for the right value, I wouldn't trust that. We should, but at the same time, it's up to us to make sure that they're telling us the right thing.
And there's several questions that touch upon this. This one kind of encapsulates it. So if we have an insured who says the vehicle is worth, say, $10,000, and when underwriting reviews, do we get notified right away if overvalued or undervalued?
Yes, absolutely. And the interesting thing is that we find we actually find overvaluing sometimes. I don't want to say it as bad, but it can be as bad. You never want to put an insured in the moral hazard position of finding that they can turn in a full loss claim and get paid more than they could if they actually sold the car outright. So absolutely, that's part of the underwriting process. That's what we do each and every day, making sure that those vehicles are insured correctly, the day we get them on the application.
And I think this will be the last question that we are taking. And I'll try to paraphrase it. What's the worst case scenario? Do you have some concrete examples of this in action?
Yeah, actually, it's interesting. You said we're not immune to underinsuring cars. I mean, when you've been doing this as long as Condon has, I mean, some are absolutely going to slip through. It's just the way that it goes. We've had situations where we've had, again, part of the reason why we started the program. You start looking at files that you've had on the books for 30-plus years, and we've had collections where they should have been in the 7-figure range, and they were, a couple $100,000. And again, it's that situation where the person owned the cars forever. They decided not to, for whatever reason, never increase the values. We just keep renewing them over and over again, and all of a sudden, it just turns into a compounding problem. So that actually is, again, we looked at ourselves first, and that's why we decided this was something that we really needed to address, fixed it internally, and now rolling it out externally to everyone else. So, and at the end of the day, if you've got a customer that just flat out says, I don't want to raise my values, that's it. I'm happy. I don't care. If I'm only going to get paid $5,000, I'm fine with that, whatever the situation is. We've actually taken the position on a few to say we can't raise you anymore. Because one of the things that we can't forget about is, don't forget, these are assets. These are investments. And for a lot of these people, they've got family members that are looking at this car collection as a potential inheritance. And if something happens to that car owner, say everything goes up in a fire, it's not just the owner you're going to be answering to, it's going to be the estate. So it's not just the car owner sometimes that we have to worry about from an insuring the value standpoint. It's people that also surround them. So don't forget about that too, that at some point, you might just find a customer if it's the only thing you're writing for them is a collector car policy, and they choose not to increase the value, you got to make the hard decision that it might be better off that you part ways and have somebody else underinsure for them. So.
Well, with that, we thank you very much, Jim, for the presentation and all of the answers. We thank the audience for attending today. We had a very large audience. If you have additional questions or want additional information, you can contact cars at condonskelly.com. The screen is on the information is on your screen right now. You can dial 800-257-9496 or go to condonskelly.com. Condon Skelly will reach out to you with the responses to any questions that we could not get to, and we have some that are very specific for agencies asking for additional information. And we thank everyone for attending. Jim, thank you, and we wish you all a great day. This web seminar is now